Bitcoin is extremely volatile. And right now the value is currently at 5309. But I could wake up tomorrow and it could be $50 or 20 or 0. At the same time, Bitcoin is by far one of the best investments that you can make currently. And I'm going to explain to you how that is. Because I see a lot of misinformation going around. First of all, you have a lot of scammers that are out there that are pushing all kinds of, you know, ICOs and they a lot of conflict of interest, right? They're getting paid to promote various products, right? And they're going out there and like, oh guys, this is the best thing, whatever. And all they're really doing is trying to line their pockets. Now, with full disclosure, I currently have no connection to the cryptocurrency industry. I previously was directly involved in that industry from an exchange perspective. I've been directly working with some of the major exchanges that deal with cryptocurrencies. I'm not going to say which ones, but some pretty major players. And I was behind the scenes in sort of the, let's say, from the groundwork, of building some of the infrastructure that you see out there now, and coming up with new products, as opposed to just simply buying cryptocurrency. So that is my background. But currently, I have no connection to anything cryptocurrency related. I apologize. I'm a little under the weather. So I get no benefit whatsoever if you guys decide to buy cryptocurrencies. You don't like them. Does not affect me one way or another. One of the reasons why I decided to do this video is because I see a lot of misinformation floating around. Like, for example, my good buddy here, who has been sort of a naysayer, talking about how Bitcoin is it's nonsense. It's just all this negative stuff. And I have people in my personal life who've also said a lot of negative things about Bitcoin. But let's get to the facts of the matter. There's something called a risk reward. Let me see if I can pull that up for you. Risk reward graph. Let's pull that up. I got too many tabs open. Here we go. So here's a graph that is showing you, on the bottom you see risk, and on the left you see return. And as you can see, as the return gets higher, so does the risk. So why am I pointing this out to you? I'm pointing this out to you because, as I've already illustrated, there is a lot of volatility, which is a good thing, by the way, for those who understand how trading works. From volatility comes opportunity. If you have the opposite of a high volatile instrument, then you don't have opportunities, right? It's from the volatility that presents the opportunities to make money. Right, you need that. You need this, the swings in the price, so you can buy low, sell high. Right, if the price is not really moving much, there's not much opportunity to make money there. Right, but again, as you can see with this graph, when you increase the risk, you also increase the return. When you decrease the risk, you also decrease the return. Right, so yes, Bitcoin and other cryptocurrencies are highly volatile, and the risks are considerable, but so are the rewards. It's the price of admission, the price that allows you to have the potential to get these massive returns is that you have to accept the risks. Now, beyond that, let's talk about let's talk about some of the real problems. So you have people that are being very irresponsible out there who will do things like sell their houses, they'll take their entire retirement plan and they'll invest it into cryptocurrencies. That is absolutely not what you want to do. That's extremely irresponsible. And the reason that it's irresponsible has nothing to do with digital currencies. The reason why that is really irresponsible is because you should never invest more money than you're willing to lose. I'm going to say it again. You should never invest more money than you're willing to lose. That's the bottom line. And if you never invest more than you're willing to lose, then all of this hysteria about, oh, Bitcoin, whatever, all that is unnecessary. Because the way that you invest, whether it's stocks, option, bonds, whatever it is, digital currencies, every dime that you invest is a dime that you can afford to lose. If you're investing money that you can't afford to lose and you lose it, that's on you. It's not on the instrument, it's on you. Now, for me, my personal strategy was when it was around 3,000, I said and you guys remember I made a video. I said that's a pretty good point. $3,000 is an amount of money that I'm comfortable with losing. Now, considering the potential of me doubling that money or tripling that money, it's worth the risk to me. Because if Bitcoin completely collapses, that $3,000 does nothing for me. I'm not going to wake up one day and, oh no, I can't pay my bills or whatever, oh, I lost $3,000. Every dime that I put into my investment portfolio is expendable cash, money that I do not need and does not affect me in any way. And that is the way that you should be investing, whether it's stocks, bonds, options, cryptocurrencies, whatever it is. You should never be investing more money than you're willing to lose. And if you do that, all these scary tales about, oh, you're going to lose your shirt. How am I going to lose my shirt when all the money I'm investing is money I can afford to lose? The horror stories come from irresponsible people that get greedy and they put money that they can't afford to lose into cryptocurrencies. By the way, the same risks apply to just about most of the higher return instruments. Like, let's say stocks, for example. You could have all the charts you want and all kinds of strategies and whatever it is. And I'm going to invest in Apple. Apple's a solid company. They've been around forever. Overnight, there could be a major fire where a lot of the chips that Apple needs are manufactured. And then there's a major shortage in these chips, which causes a huge issue for Apple. And you could watch that stock drop overnight massively. These risks apply to just about any high gain type investment. Right now, as I'm speaking, we could be beginning World War III. Right? For all I know, some international incident is happening right now where we're about to go to war. And that's going to massively affect the U.S. economy, the global economy, and therefore the stock market. Right? So I don't care how much planning and you pick the right stuff. There's always the risk of major changes in price happening very, very quickly and unexpectedly. Now, with all fairness, obviously the risk is significantly higher for things like Bitcoin. I mean, the price can swing $100 in a day, and that's not even something surprising. But let's look at some basic. So we'll talk about how risky it is, right? So let's just break it down. Let's take a breather and just look at the numbers. So here is a Bitcoin graph. Now let's just do max actually. So let's say you had invested. So Bitcoin was at $100 in 2013. If you had invested $100 in Bitcoin in 2013, you had from November 2013, when it's at 1,000, that's a massive return on $100. Turning $100 to $1,000 in just a few months. Now, what else do you know that can do that? But anyway, you had from November of 2013 until, well, actually pretty much any time. It never went lower. So pretty much simply buying any amount of Bitcoin in 2013, you could have simply just held it and sold it at any time you wanted to. You could have sold it at 20,000. You could have sold it at 7,000. You could have sold it at, look, all this is years and years. I'll talk about how dangerous it is. Years and years. And just simply, selling at any time, you could have doubled and tripled your money. That's it. Right? Any of these times, look at, you could have bought Bitcoin from 2013 until, I'll be a little more drastic here. You could have bought Bitcoin from 2013 up until summer of 2017. If you bought Bitcoin at any time, 13, 14, 15, 16, 17, for 4 years, you could have bought Bitcoin at any point in time. And you would have easily made massive amounts of profits. Now, if you bought at higher times, like now, let's say it's 620, you bought it at, then it drops a little bit under. So let's see how long it takes to get a return on that. So this is June of 2014. So how long does it take to get over 600? Well, we can see the line where that takes you. So 2014, it would have taken you 15, so 2 years to start getting a return, and then look at what comes next. So a small investment of $1,000, $2,000, you could have had massive returns. You could have missed all of this. You missed all of this. You got greedy and it fell back down. Now, of course, there are people who may have bought way up here, 10,000, 15,000, and, they took a chance and they lost. But again, this is the way that it works. Not Bitcoin. This is the way it works in investing in general. The more potential return, the more potential risk. Now, a lot of these people who lost a lot of money, it's not Bitcoin why they lost a lot of money. Look at the kind of returns that they had. So you bought at $600, $1,000, and you sat there. Now let's look at the period of time. So from 2017, you sat there from 2017, 5, 6, 7, 8, 9, 10, 11, 12. You're talking what, 7, 8 months. 7, 8 months that you could have sold at any point in time and had massive returns. You've got this new thing. Bitcoin is brand new. You don't have any track record, right? A lot of questions about it. People don't understand it. And you sat there for 7 months watching it rise, knowing at any point in time you could have sold and had massive returns. But yet you sat there and let it rise and rise and rise as if you thought it was just going to keep going up forever. Nothing does that, right? The stock market goes up, it goes down. The economy goes up, it goes down. The higher the price of whatever the instrument that you're investing in, typically, you're getting closer and closer to where it's going to reverse. Now, I understand a lot of people don't have trading experience who got involved in this. This had mainstream adoption, so you have a lot of people who don't have any trading experience, and and it's greed. But even without trading experience, you have to have some common sense that this is something you don't fully understand. It's this new thing, some digital thing, and it's a lot of question marks. And when in life do you see this kind of thing happening where you spend $100 and now it's worth 5,000, 10,000? Like, some common sense got to tell you something about this seems a little bit risky, and maybe, just maybe, I should just be thankful for the $5,000 that I made from 1,000 or from $500. Maybe I should be happy with that and just sell. I realize that I'm going to lose out on much more potential returns. But in the same token, this is getting insane. Right? But some people, I understand, it's tough. You see all that money coming up and everyone's excited, and you just, you're high on all this, and you held on, and then you lost a lot of money. But I don't see why that kind of activity should be the thing to say Bitcoin is horrible and you should not invest in Bitcoin. Did you see 96% of businesses fail in the first 10 years? Why am I bringing this up? Because, once again, higher risk, higher reward. The way that you can make the most potential money, one of the ways to do that, is by starting a business. Starting a business is extremely risky. 96% of businesses fail in 10 years. Extremely risky. So should we say, oh, don't start a business. Don't start a business. It's too risky. 96% failure rate. Why would you ever consider starting a business as something that's sensible, but yet Bitcoin, oh, that's too dangerous? It's just like everything else. Like, I love motorcycles. And, if you want to ride a really powerful, really fast motorcycle, like the Ninja H2 supercharged motorcycle, or a Kawasaki ZX14R, massively, 0 to 60 in 2.5 seconds. It's a lot of power, a lot of speed, a lot of return. So therefore, you know what comes next. Risk. You have a bike that you can simply twist the throttle 25% too much and the front wheel will pick right up on you. You're in a corner and you sneeze at the wrong time and you've got the throttle gripped a little bit too tight and you're done. But that's what you get when you have a massively powerful vehicle. You buy a $400,000, like the idea of like, oh, Bitcoin, it's bad. Stay away from Bitcoin. It's too risky. You're gonna lose your shirt. Same thing applies for anything that has massive amounts of value. Even look at education. You're gonna spend what to get. Let's say you want to be a doctor. How many years of school you got to invest and the money for that school? Super expensive school. A lot of years and years, and then you're starting off as like, I don't remember the terminology, but it's like you're an intern type of thing, not really making much money. You got these huge college loans. You're making a huge investment, and then you may end up not even liking it. You may end up spending 7-8 years and decide that I don't want to be a doctor. It's too stressful after spending all that money in all those years. And even if you do stay in it, look at the amount of time that you're investing. But then at the end, $180,000 a year, $200,000 a year, $300,000 a year. Massive return. But to get to that return, you had to pay a lot. You have massive returns in Bitcoin. Therefore, you've got to pay to play. Now, the other thing I think that brings a lot of negative connotation is, like I said, there's a lot of scamming involved, and not specifically in Bitcoin, but there's a whole bunch of other stuff. Like, I only deal with Bitcoin and Ethereum. That's it. And for the record, like I told you guys before, look at the portfolio. So this is a small portfolio because I don't really trade, right? You guys know that already. My money comes from the services, not from the actual trading. Trading is just too much time and the amount of return. I can just make a lot more money in the services part of things, right? Without all the stress and watching all the charts and all that kind of stuff. So this is just something that I was doing as a case study, as a project, right? I wanted to show people sort of, what you could do in terms of just having a very, very basic approach to investing. Buy low, sell high. Technical analysis, not all kinds of patterns and all this kind of mumbo jumbo and I'm going to teach you how you can, none of that nonsense. Investing in things that you understand, looking for things that are undervalued, not being greedy and not being emotional. So you buy something, you get a good return on it, you sell it. Sometimes maybe want to hold it long term, fine. But keeping it super simple, and this is just my idea. You guys can take your own philosophy how you want, but this is the way I look at it. No matter what you do, how complicated you get, right? Outside of, you working in investment banking where you have all these risk management processes in place, a whole architecture or infrastructure rather that's set up to protect you from risk. Outside of that, I'm just a regular person with just a regular day trading account. There's really nothing you can do that can prevent the potential losses of the market going down. A market crash is coming, for example. A market crash is coming. Nobody knows when it's coming. You may wake up one morning and look at your portfolio down 20%. That's just how it is. So for me, rather than getting all complicated in charts and all this kind of mumbo jumbo, simple technical analysis, understanding of the product, and best judgment, not being greedy, diversifying the portfolio so you have some equities, options, futures, some bonds, high interest savings, right? Various sectors and instruments. So you diversify by asset class and by sector. So I got some technology, some utilities, right? So those are different sectors. But then you also diversify by asset class. So I have some stocks, some bonds, some digital currencies. And then you set the allocation amount or the percentage amount of each one of these asset classes based on risk. So the foundation of my portfolio is in the low risk investments, right? So the base or the foundation of the risk pyramid for my portfolio is based on a 2% high interest savings account. No risk, insured up to $250,000. No risk, 2% interest guaranteed. Then you move up to things like mutual funds, savings bonds. Right? On the other end of the spectrum, you have things like stocks, you have cryptocurrencies. Since these are higher return and therefore higher risk assets, then what you want to do is you want to have a smaller percentage so the effect that it can have on your portfolio is limited. So even if the stock market crashes, since most of your money is in low risk to no risk, then you minimize the amount of risk that you subject yourself to. Right? So case in point, look at the portfolio. So you see right here, as you can see, I only have 23% invested in cryptocurrencies. 23%. So worst case scenario, if Bitcoin goes away and Ethereum goes away, I would just lose 23% of my money. That's a worst case scenario. I'm not going to lose my shirt. It's not going to be, life changing or anything like that. That's the difference between someone being sensible with their investments and someone being reckless and greedy. Now, remember, I made calls buy Bitcoin 3,200. Remember, I did that video. I did it live. I made calls buy Bitcoin 4,100. Both times, shortly after I made those calls, shot up 1,000. So if I was greedy, I could have easily increased my portfolio size or the value of my portfolio in the thousands of dollars just with Bitcoin alone. If I had bought when I said buy, if I put everything into Bitcoin, I could have made thousands in just a few months. But that's irresponsible. Now, not so much for me, because again, I don't invest money that I'm not willing to lose, so I can afford to lose the entire portfolio. It would not affect me. Right? All of this would not affect me. However, making a move like that would hurt my entire portfolio. Obviously, right? Because maybe it didn't go my way. Then I could have lost $2,000. Now, again, that wouldn't hurt me, but, that would be a significantly negative event for the portfolio. But once again, moderation, 23% invested in crypto. At some points in time, I may be 5% invested, right? Because what I do, like I said, nothing fancy, buy low, sell high. So when the higher that crypto gets, the lower the allocation amount that I have. When it drops, I increase my allocation. I never make it too much, but the lower the price is, the more undervalued it is. Bixby, please. I'm trying to make a video, Bixby. Get out of here. Nobody likes you, Bixby. Oh, man. I don't know why Samsung doesn't give up on that thing. But anyway, the lower the price gets, the more undervalued I think it is. So the more I invest in it. The higher the price, the more I sell. So the lower my allocation amount because I'm getting my profits. Right? If I bought it at 3,000, the closer it gets to 4, the more I'm selling. Now that's my general, how I, that's my strategy with Bitcoin. But in addition to that, the 3,000 amount I feel is a good amount to leverage for the long term. So the idea of simply putting 3,000 in Bitcoin and just letting it sit. Now I certainly would never maintain a high investment in Bitcoin through any kind of crazy, like we saw last year. The minute that Bitcoin starts going crazy, I'm looking to get out. Right? Because if it's rising fast, it's going to fall fast as well. But to preserve some of the potential returns, what you do is, once you get to the point where you've already doubled and tripled your money, then you can sell an amount where even if you lose whatever you still hold, you're still in the positive. Case in point, you've invested $2,000 in Bitcoin, but you've made $5,000 in profit. If you invested $2,000, right, and you made $5,000, then if you make sure that you're holding on to, let's say you leave 2,000 still, like you hold that position. because you want to try to get even more money. The amount of money that you made in profits is much more than 2,000. So even if whatever you still leave in Bitcoin, if that gets completely wiped out, you're still in the green. Because at the end of the day, you started with a $2,000 investment, and the amount of money that you took out of Bitcoin is more than 2,000. So you can afford to lose the entire $2,000 and still be profitable. So that's a way you can sort of hedge your bets. You know, you don't want to risk losing everything, but you don't want to risk you don't want to lose the opportunity of the potential future gains, but you also don't want to lose what you've already gained so far, right? So ultimately, I think that Bitcoin is an amazing thing to invest in. You can multiply your money really quickly. And because of how volatile it is, you don't have to even risk that much. I mean, simply having $100. Like I said, you could have made 1,000 from $100. Now, many people can risk losing $100. Right? I don't know what else you could invest $100 into that you can make $1,000 from. And I apologize. I am really congested. I'm going to have to end this live stream pretty soon. But additionally, like I said, one of the other reasons why there's a lot of negative talk about Bitcoin is because of all of the greedy folks that are out there trying to take advantage of the situation. They see the money and they're trying to pitch all kinds of stuff, and I'm a Bitcoin expert. I'm gonna teach you all this stuff, and I got this Bitcoin program, and oh, there's this new GC coin and BX coin and all this kind of nonsense, all these fake coins, and let me just illustrate how bad it is. And this is the stuff. So it's not that Bitcoin is bad or cryptocurrency is bad. It's that, and let me tell you my impression. I personally feel like, without doing a lot of investigation and analysis, just on the surface, my feelings are that I would say 97, I'd be a little aggressive there. I would say 90% minimum of the industry is absolutely shady. That's how I feel. So 90% of the YouTubers talking about Bitcoin, I feel like they're shady. 90% plus of these different crypto, different coins and ICOs, I feel like 90% of that stuff is scams. It's shady. I don't trust it. That's why I keep it simple. Bitcoin, Ethereum. Are Bitcoin and Ethereum perfect? No. Is the stock market perfect? No. There's certainly fraud happening on the stock market as well. There's lots of regulations and rules to prevent that kind of stuff, but I know it happens. You have really rich people that manipulate prices, for sure. So that's not unique to cryptocurrency, and certainly I'm pretty sure there's some shady stuff happening with Bitcoin and Ethereum and pretty much every one of them, just like you see with the stock market. However, I feel totally comfortable investing in Bitcoin and in Ethereum. But to illustrate how dishonest the industry is, let's take a look at this website. So this is bitcoin.com. Now you looking at it, look at the colors and looking at the logo, you would think, this is Bitcoin. But little would you know, by the way, they're saying, hey, you can purchase BCH or BTC. Maybe you don't even know what that is, right? Oh, here's the official Bitcoin website, bitcoin.com. But then there's this other website called bitcoin.org. What's that all about? Well, you have an individual with the last name of Ver, V-E-R, CEO of this company, who thought it'd be a clever idea to create this thing called Bitcoin Cash using the Bitcoin name and colors, and then he buys the bitcoin.com domain so that unsuspecting people can go to this website thinking that they're going to Bitcoin, but they're actually going to his thing, which is BCH, Bitcoin Cash, and not BTC. So even the very domain of Bitcoin has shadiness. Nothing to do with Bitcoin itself, but again, the industry. Highly unregulated. So you have this highly regulated industry. The stock market in the United States. You have all these exchanges, lots of rules. You have the SEC. And even with all of that, you have people doing shady stuff. Sometimes they get caught, sometimes they don't. Then you have this industry, which is not really regulated. So can you imagine the kind of stuff that goes on? Yes, I assure you there's a lot of stuff going on. That being said, I got no problems investing in Bitcoin and Ethereum. I'm sure there's some others out there. I don't know. Do your homework. Don't ask me. I'm no better than you at doing Google, doing some analysis, making an assessment, making a judgment call, right? I can read just like you can read. I don't have any insider information, right? The only thing I can say is Bitcoin, Ethereum, that's what I invest in, mostly Bitcoin. And like I said, they're not perfect either. Price surged recently, not too long ago. I wouldn't be surprised if there's some shady stuff behind it. But at the end of the day, you could have bought in January and did nothing else, and yet have been profitable pretty much all year, massively so, and continue to grow. But Bitcoin is dangerous. Yes, it is. It is dangerous. But that's the price of admission. You want safety? Put money in your savings account. And now, the last comment I want to make, someone told me that they would feel very bad recommending to their clients to invest in Bitcoin. To that I say, how silly. How silly. When it comes to investing, there's something called risk profile. Now, if you got a 80-year-old man, or even 60, perhaps you shouldn't be recommending Bitcoin to that individual, but perhaps you could, because it depends on the risk profile. Typical risk profile at that age would be very low, but not necessarily. Maybe the person, feels like, they're not going to be alive much longer. They don't care. They won't take a chance. It's on them. It's up to you to give your client what they need. Just make sure they understand the risks. So Bitcoin is not for everyone. It's a high risk profile. If you have low risk tolerance, then Bitcoin is not for you. Simple. But to say Bitcoin, like I would never recommend Bitcoin to a client. So you mean to tell me if you have a client whose risk profile is at a level where it would accommodate the risk level of Bitcoin, you wouldn't recommend it to them? Even though it's one of the best investment instruments in terms of return? That makes no sense to me. You recommend the investment that's appropriate to the client based on many factors, including the risk profile. So unless you're suggesting that none of your clients have a risk profile appropriate to Bitcoin, the idea that you wouldn't recommend Bitcoin to your client because it's too risky is silly. Right? We could go through the list of different asset classes in increasing risk levels. Riskier, 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 riskier. Higher return, higher return, higher return, higher return. So this is on the high end of the scale. This is an extreme, but this is that $400,000 Lamborghini. This is that Kawasaki ZX-14R with a massive engine, 0 to 60 in 2.5 seconds. This is an extreme level investment, appropriate for extreme level investors who can afford to lose all the money that they invest. And just to clarify, that's not just for them. No matter what your risk level is, no matter what your risk tolerance is, you should be willing to lose 100% of whatever you're investing. And if you're not, don't invest it. Keep your money in a savings account where it's safe and secure. Because just about everything else has risks where you can lose money. And if that's a problem for you, then you shouldn't be investing. Thanks for watching. If you have any comments, questions, please comment below. I would appreciate a thumbs up on the video. But my final verdict is Bitcoin is rocking and rolling. But it could go to zero overnight. Not likely, but it could happen. You got a problem with that? Don't invest in it. Thanks for watching. Until next episode.